Nvidia's shares fell about 3% in the extended trading hours following its earnings report for the fiscal second quarter 2026. The sell-off was triggered by its tepid outlook for the current quarter, as well as uncertainties about the US AI chip export curbs on China. However, Nvidia's shares are still up about 30% year to date, and its market valuation is sitting above $4 trillion, making it the largest company globally. So are Nvidia's shares still worth buying? By looking at its figures alone in the earnings report, actually Nvidia had a very strong quarter. So overall sales came in at $46.7 billion, up 56% year-on-year, and this compared to the average estimated $46 billion. Earnings per share is at $1.05, up by 54% year-on-year compared to the $1 expected. The data center sales were at $41.1 billion, up 56%, which accounted for 88% of its overall sales, and the figure compared to the estimated $41 billion. So actually, Nvidia have beat market expectations in its earnings report. The primary issue is that Nvidia forecasts $54 billion in revenue for the current quarter, roughly about 54% annually growth, meaning that the growth rate actually will slow further. Plus, it remains uncertain about China's sales. In the second quarter, it says the earnings didn't record any H20 sales in China, and the guidance also includes any Chinese sales, which could generate between 2 billion and 5 billion sales. However, it might have to hand over 15% of its revenue to the US government. On a positive note, increasing AI spending by the hyperscalers, including Amazon, Alphabet, Meta, and Microsoft, could continue to drive its future growth. Nvidia's Blackwell data center sales rose 17% sequentially, and CEO Jensen Huang said, Blackwell's production is at full speed and the demand is extraordinary. Nvidia's price to earnings ratio is at 44, a reasonable setting based on its growth prospect. So what are your thoughts on Nvidia's earnings and its future stock performance? Leave your comments below.